Hi everyone, Huzaifa Farouk here. Thanks for watching this video. In today's video, we're going to be going through some of the markets and how they performed in terms of price action. We'll also take you through some of how the ultimate Renko strategy performed as well for the NQ and maybe another market if we can find one that had some good price action. We'll start with the FDAX and we'll use purely pricing price action. All right. So on your chart, if you can follow along with me, what I have here is an 89 EMA. I'm just going to open it up so you can see it. My apologies, 34 EMA, and basically this EMA shows you where it takes away some of the guessing criteria in terms of whether you should buy or sell. You should be disciplined enough at this point, or at least learn from this video, to have criteria in your trading. So for example, only take trades when the price action is above the EMA based on your other rules, and only take selling trades when it peaks below the 34 EMA. 34 EMA I really like using because it works really well on price action, as you'll notice in some of this price action videos here. So let's start with a few trades and what could have happened on the FDAX. Now remember, every 1 point of the FDAX is $30 US, okay, approximately. It's about 12.5 euros, which approximately per tick, which is $15 US per tick. Now, if you're trading 1 point in the FDAX is 2 ticks. So if you look at my cursor here on the right, you'll see 13. Let me just start here actually. 13276.0. All right. In order to get from 13276.0 to 13276 to 13277, that's 2 ticks. Okay. So you see the tick right there. That's 6.5 and then 6. So that's 1, 2. Okay. That's 2 ticks per point. Each tick is 15 USD. So where you could have taken some trades, let's look at some market conditions here. Now what we want to do is we want to draw support and resistance. All right, so let's draw a line here. Now support and resistance is technically where prices bounce. So there was a bounce here, and try to connect as many areas of that bounce as possible. In this case, I would paint it right here. As you can see, you know, this is a classic example of what support and resistance look like right there. All right, so it broke above that line. Now, although it didn't have any exhaustion candles here, you can also look for engulfing candles, so candles that are large in the opposite direction. Now, this is not an engulfing candle. However, it's a big enough bar, bullish bar, for some traders to be able to take trade over there. I wouldn't have taken a trade here. Why? Because of this candle right here. I would not take a trade here just because it's not engulfing, or there's no exhaustion bars that show that there's lack of selling. What I would do is I would not take any trades here, but I'm a very conservative trader. So I mean, this wick right here shows me that this might be a bounce downward because of the long upward wick. So I wouldn't have taken this trade, although this trade would have won. And technically speaking, breaks above old resistance, it becomes new support. Okay, and I'll be drawing here for your convenience. So old resistance, and let me change this color. I hate this color. I don't know why it's like that. We'll change it to a different funky color. What funky color should we use? Let's use white. White is pretty funky. Okay. Oh, that's why it wasn't working. Okay. Sorry, folks. I'm just adjusting my felt. There you go. All right. So I'm good now. Let me erase all this. So old support, old resistance becomes new support. Okay, breaks off of old support, becomes new resistance. All right, so let's continue here and see some of the next price action. Now this was from the 16th, so this was yesterday. I do intend on going today. Now these are all price action trading here. Now when this price bounces off from that zone, that becomes new resistance. When it breaks, which is here, you wait for it to come down, which came down here with a long wick. That's evidence that this is going to continue going up. At least set yourself a fixed target. Now on a 5-minute, because a 5-minute chart, the price, there's a lot of ticks to be had in the FDAX, especially on a 5-minute chart. So you can even trade, let's say you're making $30 a point. Even if you make 10 points, that's $300 USD per one contract. All right, so you can set your target at 10 points. So in this case, if you had placed a trade at, let's say 13,303, you're looking for it to go to 13,313. Okay, which is right here, which it did during this bar. Okay, and that was without. Now I trade 1 or 2 trades per day and I'm good to go. Some folks like to do more than that. So this is now volume's picking up here. So let's look at, let me just erase this and see what happened. Now this is at 720. You could trade this for another 10 points if you wanted to. Just the only reason why I wouldn't is because it is deviated away from the EMA. Now that's an indication that the price is going to come back and touch the EMA again. All right, so when there's a big deviation, now look at the deviation. This is small here, gets bigger, gets even bigger, so on and so forth, and it gets really big. Okay, when that happens, that shows me that there might be a slap back into the mean or the EMA. Okay, now some traders would have been able to take that just because there's, number one, there's exhaustion candles. There's also a hammer. There's also a hammer candlestick right here, which we talked about in the last video. Make sure if you haven't seen that video, watch that video. This is a hammer right here. Okay, and that's evidence of trend continuation. So in our last video, we talked about when price comes back to old support or resistance, candlesticks usually show exhaustion in that area if it's going to continue up. That exhaustion is evidence that it's going to continue up, and you can take a trade to the upside. Now, some traders, what they do is they take a fixed, if they're trading multiple contracts, they take a fixed target off at, let's say, 10 points. And then they leave the last contract or last whatever, however many contracts they have left at the last point of resistance or support if it was a breakout. Okay, that's where their last profit target would be. It extends the amount of money that they make, which comes from the saying, you know, let your profits run. All right, so let's continue on here with the FDAX and see what else price action stuff happened. Now we will draw a line here, here, and here. All right, so those are 2 points that it bounced off, so we'd watch what happens to the price when that happens. All right, now this is obviously going down towards the mean and the EMA, and this is showing range bound market so far, so you're not doing any trading right now. However, look at what it does over here. It breaks this point right here, and it shows you an exhaustion candle right there. All right, now what happens is when it breaks, if it doesn't show you evidence that it's going to continue down under the EMA, then you wouldn't trade just because it went under the EMA. What you want to do is you want to wait for confirmation. Now this right here is good confirmation that the price will continue downwards. The only reason why I would be wary of taking this trade is because of this big wick down here. That shows that there's probably still exhaustion in this area. Sorry, they're still ranging. That means this price could potentially go up. 2 wicks on both ends of the candle signify indecision in the market, and that's enough for me to say, you know what, this is not ready to go down yet, and it might hit another point of resistance, which could be, actually there's supposed to be another line over here, right here. And I drew this because it bounced off this point, and then it also broke that point, and it came back and bounced off that point again. So that's a valid point of resistance. So you're waiting for it to touch any one of these particular lines. All right, so let's see what happens when it touches the first line. Okay, so it comes close to that line here with that wick. That wick shows me that price went up and sharply bounced back down, meaning there's still some indecision in that area, and you're waiting for, you can take a trade here. Why? Because it, number one, is under the EMA. Number two, you've established that it's making lower highs, and number three, there's a slight area of support that was broken right over here. Okay, let me change the color of that line to something else, and we'll set as default. All right, right here it broke, and it came back with 2 large wicks, 3 large wicks almost. Ay. Okay, see all these large wicks that are bouncing off that orange line? That indicates that this could be going down. You can place a trade anywhere here. You can get your 10 points. Let's say you placed it anywhere here at 1306, let's call it. You'd wait for it to hit 96, which is right here. That's your 10 points. That's your $300 per contract. All right, and then what it's doing, it is bouncing off of this general area here. Bounce off here, bounce off here. Now it's showing you bullish, bearish candles, and there is another hammer. However, it hasn't broken yet, so this could be still ranging. What you want to do is let it break out in that area, which it does over there, and then you're placing your support and resistance lines as they come. So see here, this right here, that establishes another support line. Let's just move this line over here. Okay, that established another support line. What happened there is once that was broken with this candle opened, hit that bar, and it went down. See, because that was support. That, watch for wicks, folks. That is very important for you to watch for wicks. Even here it happened. Candle came down, sharply moved up. So when it broke out, it came back and it created these two large wicks here, and it continued down. Alright, so you're watching for that happening. Even here, big wick here, broke out with this, came up, and boom. Okay, now you're just waiting. Here too, there's another candlestick right here. Long wicks, you're waiting for it to break out a little bit, reach back up and down. Okay, now we're waiting to see what happens. Okay, right here is another. Okay, we're connecting this and this. So when it touched that, created a hammer. Look at the hammer, guys. Look at the hammer. Hammer is very important. Not here. That wasn't the hammer. Sorry, that was a hammer. This right here is the hammer. Missed it. Right here. See, when a hammer comes at a point where there was an old support and then becomes new resistance, boom, it shot back down. Alright, now you're not looking for this thing to just go crazy. You're just looking for your 10 ticks, or sorry, your 10 points, and you want to call it a day. That's about it. That's all you're looking for. And that's pretty much end of day. Volume has reduced. As I mentioned in my earlier video, you know, between the hours of 11:30 to 12 and 3 or market close, the markets are dead in FDAX. You want to trade anywhere between, I would say, about 5:30 and 10:30 with the FDAX is generally the time there's a lot of volume. So let's look at today's price action. I believe it was today. Okay, so basically here there was a potential trade right here, broke out, came back. It didn't quite touch this support, but it came back here and created a opposite bullish candle. All right, this is evidence that this could go up. However, watch that it's under the EMA. So if you have the rule that you don't want to take trades that are buying when it's under the EMA, then you wouldn't take that trade. All right, so you're just watching still. Right now you've established this part here as an area of resistance. So you're watching to see what happens, see if it breaks, which it does here. Okay, and then notice how this part right here, this price, there's a point of resistance here. So you drew a line and you watched it come up and had this big wick over here. That's evidence that this could potentially be going down, but again, it's on top of your EMA, so you might not want to take a trade that goes against your EMA rule. All right, now again, we missed the spot right here, but you wouldn't take any trades here. You're just waiting, and there. Here's another area of, see this part right here, there's a lot of wicks bouncing off this area. Boom, boom, boom here. And then it came back here, created this long bullish candle. Take it at 18, or let's say even 19. Watch it go to 29 for your 10 points. Okay, that's 20 ticks. That's $300 right there. And then it breaks out. It breaks out of this support, and let's see it come back. Okay, but it didn't show any signs of exhaustion. However, when it came back to this support, it's showing this big wick right here, and boom, take a trade right off these wicks. Even off the first one, you could have taken a trade. That's a reverse hammer right there, as the hammer that we keep talking about. And there's the exhaustion, another hammer right there, and another mini hammer. All these big wicks bouncing off, showing evidence that this thing is going to continue downwards, and boom, just went completely downwards. Okay, now there's another point of support here. We'll just take this line right there and draw it up right like that. Actually, we'll draw it right here. Okay, now notice the wicks, guys. See how the wicks are operating. Now here's another area of support, and you see the big wicks that are bouncing. The big wick over here, that's evidence it's going to continue down. Then you see more bearish bars, and take a trade anywhere along this line for your 10 points. All right, easy 10 points. and then it just ranges after 11:30. It's just low volume, nothing going on. All right, and that's basically the FDAX. The video is probably long. Let me see how long I've been recording now. Oh wow, okay, 15 minutes. So let me just go through Alright everyone, I also wanted to take you through the NQ and how it worked with the ultimate bankroll strategy. Now, although this is one of our permission trades right here, oops, get rid of that. This is a permission trade right here because it's bouncing off this solid line here. It shows a lot of white bars. Alright, now remember, when you show a lot of white bars, especially when it's trending downwards, breaking all these swing lows that you see here, that means you're not taking any buying trades unless you make a higher high or it breaks a resistance point. Okay, so there's no trade here. This is not a trade. And for those people that are in our course, already know that. Okay, so I'm just letting people that don't know that. Okay, so now what we're watching for is another. Now this right here is showing you that this has deviated away from this mean right here. So if it creates a pattern like this, now when tail is touching the solid line right here, that's a trade. But if it breaks that point and it bounces up, it could very well go up. We don't know that, but what we do know is we're not going to take a trade. This pattern right here is not a permission trade, as people in our back office know. I'm starting to not like this color, so I'm going to stop using it. I'm going to use a different color. I'll start using white. All right, this right here is not a permissions trade. All right, but when this happens, our rules are that wait for a reversal candle. If there's a reversal candle, that means that it's possibly going to go down and hit this dashed line over here. So that's what we're going to do. We're going to take a selling position there, and we're going to take a selling position right at the close of this bar at 6784.25. When this bar becomes white, take a selling position and you go forward. So in this part right here, the bar became white. You place a trade at 6784.25. With our system, we have a 2-point target. So right here is our profit target at, sorry, what am I? 4.25, 2.25, right here is our profit target, easily hit on this bar. All right, so as you all know as well, we have a we just trade once, and one time we profit and we're good. Now this is not a valid trade to the upside because it broke a, oopsie, I don't know what happened there. Sorry, I have to go back here. Where was I? I think I'm getting there. Yeah, right here. Okay, so when this happens, because it broke this dashed line, you're not taking your buying positions, especially because it broke this support area. Instead, you're waiting for it. If especially it did this, you're waiting for it to hit the EMA, solid. You're waiting for it to hit the solid line. If it does, then you're taking a trade at the end of this white bar to the downside, but it didn't touch this area. Okay, so you're not taking any trades here. So what you're waiting for it to do is you're waiting for it to clear this EMA for it to hit. Look at this. Okay, so old support became new resistance, came back up here. Take a trade at the 72.25 for your 2 points right there. All right, and then what you're waiting for it to do is either hit this support area right here, depending on what the candles look like, or you're waiting for it to hit this solid line at this point right there. All right, now right there is a perfect area for you to take a trade at 70.25. Wait for your 2 points at 68.75, and you got your profit target right there. And then there it is. It touches it again, the solid line. Take a trade at 69.25 and let it go down to 67.25. There's your fourth trade. All winners so far. Okay, wait for it to get there. You go again. Hit it right here and let it hit to 61.75. Hit it 58.75. 59.75, sorry, and your profit target is hit right there. That's 5 trades, all profitable. Even this trade is profitable right here. Then you wait for it to retrace back up, hit that line right here. There's another profit target right there. Okay, and it bounced off here. The number of trades are just, I can't even go through all of them. There's so many successful trades. Even if you had 1 or 2 losers here, which I can't even see, then you would have well made up with it by just making one of these trades right here. So folks, the video has gone on a little too long, more long than I wanted to, but there's another video on the FDAX and how our strategy performed as well. If you like this video, please like and subscribe. If you'd like, check out the website we have. A link is below this video. Make sure you check it out and join our webinar. Thank you guys for watching once again. I really appreciate it. Have a great day.